Silver is sitting just under $60 an ounce, but it briefly crossed that line last night before pulling back. In 2 days, the Federal Reserve makes a decision that could send this market flying or crashing. And there's something else. A new proclamation just landed, naming a critical mineral tied directly to America's silver supply. Is the turning point finally here? Or is this just the calm before something bigger? Welcome back to Currency Matrix. If you're tuning in from anywhere across the United States, drop a comment below and let us know where you're watching from. We love hearing from you. If you find value in what we cover here, consider subscribing so you never miss an update on the markets that matter most to your savings. Now, let's get into today's story. Silver prices are making headlines this week, and traders across the country are paying close attention. As of Monday, July 27th, silver is trading at $59.34 an ounce, up more than 1% on the day. Just last night, the price briefly crossed the $60 mark before pulling back. This small move has caught the attention of investors who believe silver may be gearing up for its next big run. Gold is also climbing, though at a slower pace. It currently sits at $4.87 an ounce, up about 0.5%. When analysts compare gold to silver, they look at something called the gold-silver ratio. Right now, that ratio is falling, but it still remains around 70. A falling ratio often signals that silver is gaining strength compared to gold, which is something many precious metals investors watch closely. The reason behind this week's excitement centers on the Federal Reserve. In just 2 days, the Federal Open Market Committee, often called the FOMC, will meet to decide what happens next with interest rates. Fed Chair Kevin Warsh will lead this meeting, and the outcome could shake up the entire precious metals market. According to current market data, there is a 62% chance that rates will stay the same. However, there is also a nearly 40% chance that the Fed raises rates by a quarter point. This decision matters more than most people realize. If interest rates go up, precious metals like gold and silver often drop in value, while the US dollar tends to grow stronger. Investors who understand this relationship watch Fed meetings the way sports fans watch championship games. Every word from the Fed chair can move billions of dollars in a matter of minutes. Looking further ahead, market forecasts suggest the Fed may only raise rates 2 more times before the end of the year. Because these expectations are already known, much of this news has already been factored into today's prices. That means even if the Fed does raise rates this week, the reaction may not be as severe as some fear, since the market has already prepared for it. Alongside the Fed decision, another major story broke last week. The federal government released a proclamation involving a critical mineral, and many silver investors held their breath, hoping it would be about silver itself. Instead, the announcement focused on aluminum. The proclamation adjusts tariffs and creates incentives for companies to begin producing more aluminum right here in the United States. While this news wasn't about silver, it carries an important message. Silver was recently added to the official list of critical minerals compiled by the United States Geological Survey. This means the government now recognizes silver as a resource that plays a major role in national security and economic stability. Many analysts believe more announcements could follow, and some hope silver will eventually receive the same kind of attention that aluminum just received. This story is unfolding at an important moment. With silver flirting with $60, a major Fed decision just 2 days away, and new government attention on critical minerals, all eyes are on how these pieces fit together. Investors, everyday savers, and anyone watching their money closely have good reason to pay attention this week. The choices made in Washington over the next few days could shape the direction of silver prices for months to come. To understand what happens next, it helps to know how the Federal Reserve actually makes its decisions. The Fed doesn't just guess when it comes to interest rates. It follows a structured process built around inflation numbers, employment data, and overall economic health. Every 8 weeks or so, the Federal Open Market Committee meets to review this data and decide whether interest rates should rise, fall, or stay the same. This week's meeting, scheduled for Wednesday, is one of the most closely watched events on the financial calendar. Right now, the federal funds rate sits between 3.50 and 3.75%. Based on current market pricing, there is roughly a 62% chance the Fed leaves rates unchanged this week. At the same time, nearly 40% of traders believe the Fed will raise rates by 1/4 percentage point. These numbers come from data tracked across financial markets, where investors essentially place bets on what they expect the Fed to do. If the Fed does raise rates, it typically means borrowing money becomes more expensive. Mortgages, car loans, and credit cards can all see higher interest charges. For precious metals like gold and silver, a rate hike often makes them less attractive compared to interest-bearing investments like bonds or savings accounts. This is because gold and silver don't pay interest. So when other investments offer better returns, some investors shift their money away from metals. Looking beyond this week, forecasts suggest the Fed may only raise rates 2 more times before the year ends. That works out to roughly a 38% chance of 2 total hikes happening between now and December. Because this expectation is already widely known, much of it has already been priced into today's silver and gold values. This is an important detail, since it means the market may not react as dramatically as some expect, even if a hike happens this week. Alongside interest rate decisions, another major development is unfolding around critical minerals. The United States Geological Survey maintains an official list of minerals considered essential to national security and economic stability. Silver was recently added to this list, placing it in the same category as materials the government considers vital to protect and strengthen domestically. Last week, a formal proclamation was issued regarding one of these critical minerals, aluminum. The proclamation adjusts existing tariffs and introduces incentives designed to encourage companies to manufacture more aluminum inside the United States. While the announcement did not mention silver directly, its existence signals that the federal government is actively working through its critical minerals list, one material at a time. This detail matters more than it might first appear. The United States currently operates only 4 active silver mines, and the country imports roughly 80% of the silver it uses each year. When compared globally, the U.S. ranks 6th among silver-producing nations, trailing far behind countries like Mexico, China, and Peru, which lead global production by a wide margin. Because of this heavy reliance on imports, some analysts view silver's placement on the critical minerals list as a meaningful first step. If future proclamations follow the same pattern used for aluminum, silver producers inside the United States could eventually see new incentives, protections, or investment support. For now, no such action has been confirmed, but the door has been opened. Together, these two stories, the Fed's interest rate decision and the government's mineral policy, create a moment where financial policy and long-term resource planning intersect. Both carry the potential to influence how silver performs, not just this week, but for years to come. As Wednesday's meeting approaches, all attention turns toward Washington, where a single decision could set the tone for the months ahead. When the Federal Reserve makes a decision this week, the effects will reach far beyond Wall Street trading desks. Everyday households across the country could feel the impact in ways both direct and indirect. Understanding these consequences helps explain why so many people, not just investors, are paying attention to Wednesday's announcement. If the Fed raises interest rates, the U.S. dollar typically grows stronger. A stronger dollar often puts downward pressure on precious metals prices, since gold and silver are priced in dollars worldwide. When the dollar strengthens, it takes fewer dollars to buy the same amount of metal, which can push prices lower in the short term. For anyone holding silver as a long-term store of value, this kind of short-term dip is often seen as part of the normal cycle, rather than a lasting setback. On the other hand, if the Fed decides to hold rates steady, it could offer some breathing room for silver and gold to continue their upward momentum. Many analysts believe this scenario is more likely, given the current 62% probability of no rate change. A pause in rate hikes often signals that the central bank feels inflation is under control, which can boost confidence across financial markets. Beyond interest rates, there's a deeper economic story playing out. Recent data shows the U.S. dollar has lost nearly a third of its purchasing power over just the past 6 years. That means the same amount of money buys significantly less than it did before the pandemic. When looking back over the past century, since the creation of the Federal Reserve in 1913, the dollar has lost approximately 96% of its original value. This long-term decline explains why many people choose to hold physical assets like gold and silver as a way to protect their savings. The impact of this purchasing power decline shows up clearly in everyday costs. Over the last 7 years, prices for basic necessities have climbed sharply. Groceries are up 33%, shelter costs have risen 35%. Family health insurance premiums have grown 38%. Electricity bills are up 44%, and gas prices have climbed nearly 50%. Even more essential items have jumped further, with a dozen eggs rising 72% and a pound of coffee increasing by a staggering 127%. These rising costs affect nearly every household differently, but the pattern is the same everywhere. Families are spending more to maintain the same standard of living they had just a few years ago. For many, this reality has become the strongest argument for owning physical precious metals, not as a speculative bet, but as a form of financial insurance against a currency that continues to lose value over time. There's also a broader national security angle tied to silver specifically. With the United States relying on imports for roughly 80% of its silver supply, any disruption in global trade or mining production could create real challenges for industries that depend on silver, including electronics, solar energy, and medical technology. This is part of the reasoning behind silver's recent addition to the critical minerals list, and it highlights consequences that stretch well beyond investment portfolios. Taken together, these factors paint a picture of an economy at a crossroads. Interest rate decisions, a weakening dollar, rising everyday costs, and growing mineral dependency are all connected. Each piece influences the others, creating ripple effects that touch financial markets, government policy, and household budgets alike. As this week unfolds, the consequences of these decisions will likely be felt for months and possibly years to come. As this week unfolds, viewers are left with an important question. Will the Federal Reserve hold interest rates steady, or will they move forward with a rate hike that could shift the direction of precious metals? With the odds currently favoring a pause, many are watching closely to see whether that prediction holds true once Wednesday arrives. What would a rate hike mean for personal savings? And what would a pause signal about the broader health of the economy? These are questions worth sitting with as the decision draws near. Beyond this week, the bigger picture remains just as important. Silver has already made history this year, briefly climbing above $100 an ounce before pulling back to where it sits today. For many long-term investors, this pullback isn't viewed as a warning sign, but rather as an opportunity. History has shown that precious metals often move in cycles, with periods of rapid growth followed by consolidation before the next upward push. The question many are asking now is whether this current stretch marks the quiet before the next major rally. Looking ahead, several developments are worth watching closely. First, the outcome of Wednesday's Fed meeting will likely set the tone for precious metals through the rest of the summer. Second, any further government action involving critical minerals could shift attention back toward silver specifically, especially after last week's aluminum proclamation. If history is any guide, government policy often moves mineral by mineral, and silver may not be far behind. Third, inflation data will continue to play a central role in shaping expectations. With the dollar having lost nearly a third of its purchasing power in just 6 years, many households are already feeling the effects in their day-to-day budgets. Whether it's groceries, electricity, or gas, rising costs continue to shape how people think about protecting their savings for the future. As these trends continue, more attention is likely to turn toward assets that have historically preserved value during periods of currency decline. For those following this story, staying informed matters more than ever. Official Federal Reserve announcements, government proclamations, and Bureau of Labor Statistics inflation reports remain among the most reliable sources for tracking these developments. Rather than relying on speculation, checking primary sources ensures decisions are based on verified information rather than rumors or short-term market noise. Viewers watching this story are encouraged to consider how these developments might affect their own financial planning. Whether someone is new to precious metals or has followed this market for years, moments like this, where monetary policy, national mineral security, and inflation data all intersect, don't come around often. It's a reminder that markets rarely move in isolation. Interest rate decisions ripple into currency strength ripples into commodity prices, and commodity prices ripple into everyday costs at the grocery store and gas pump. As Wednesday's Fed decision approaches, one thing remains certain. Silver's story is far from finished. Whether this week marks a true turning point or simply another chapter in a much longer trend, the coming days will offer valuable clues. For now, all eyes remain on Washington, the Federal Reserve, and the numbers that will shape the next move for silver, gold, and the millions of people who rely on both understanding and confidence to navigate what comes next. Thank you for following this story with Currency Matrix. Stay informed, stay prepared, and we'll see you in the next update.